Hey, Mike here. I just did 2 trades and 2 new positions and sold a couple of the gold mining stocks I have. And what's been going on is that even though the U.S. stock market has been correcting, and as we speak, it's down again today, falling even more. Hopefully it'll bottom today, if not soon. But it does seem like we're lining up for some real panic in the market and a key reversal day in the VIX and in the S&P 500 too, probably like what it did in June here. But while there's been trouble in the United States stock market, and commodities too have been weak. GDX, this is the gold stock ETF. Today it's down again, and it looks to me like it's still in this basing phase, and it's retesting the lows of June. It makes me think of what we saw with shipping stocks last year. They based out from August to January when they broke out, but they had a breakdown in November and then bounced back up. The gold stocks could end up doing something like that if the weakness in the S&P 500 continues. And who knows, it may not end until there's finally some sort of deal for this budget going on in Washington. But the thing is, while all this has been going on with the S&P 500, the U.S. stock market, and the weakness in the mining stocks, the fact of the matter is that the European markets have just gone up anyway and ignored all that. And they're in what I consider to be, they're not even 1 year into a bull market. They bottomed last July. Well, we're like a year and a couple months. But we had the big surge from July to September for them as a whole. And then they paused and broke out in August and September for what appears to be a second leg up of their bull market. And that's when exciting gains are to be made. It's much different to investing in something that's in an early stage of a bull market, breaking out of a consolidation phase, and is to be struggling with S&P 500, to be trying to make money in a market that makes new 52-week highs and then pulls back, instead of one breaking out of an early consolidation phase. So this is the Spanish ETF, and here's the Italian ETF. Here's the Greek stock market, and Greek banks such as NBG have been surging. So that's making me money. And I think the European markets are the markets that will continue to outperform over the next year at the least. And I'm also watching now the Argentina stock market, because this stupid thing here, I can get rid of it, but it's broken out of also a stage 1 base 2 in August, and pulling back today and yesterday. But I think going forward it's going to be a hot market also, despite the economic troubles over there, because it fell just like the Greek stock market did. So today I sold some of my gold mining positions to raise some cash as the market correction continues, with the intention of using much of it in the European markets and eventually back into gold and gold stocks once they complete this basing phase they seem to be in. But I bought 2 stocks today, just testing the waters in the Argentina stock market. Transportation gas stock, which is paying a 3.4% dividend, and I also bought another giant oil and natural gas stock in Argentina, YPF. It's trading a dividend of 0.9%, but it's got a PEG ratio of 0.33, and it's got a chart pretty much identical to the Argentina stock market. You can really see it well because this software has screwed up the ARGT ETF chart, but it's pretty similar. We've basically consolidated here all year. Now we're breaking out just like Europe is. But the Greek stock market is the cheapest market in the world, and the next cheapest is Argentina. So I'm looking at more Argentina stocks. I mentioned a couple in the Wall Street Window Power Investor report that I sent out Sunday. I mentioned some other stocks I'm watching. So right now, I'm basically making lists of stocks that I want to buy that I think can make compelling trades, and that's what I'm doing. Sold a couple, buying a couple, looking to buy more, and enjoying this market because of what's going on in these overseas markets. It's just been a fun ride the past couple of months. So what's going on with me? I'm watching, of course, the action, the S&P 500, and the yelling on the television about it. But that's the U.S. market. We're prone now, regardless of the news, for pullbacks a couple times a year, and after them we'll trade back up to the highs. But it's a trading game right there, and I'm more interested in buying stocks that I have reason to believe are in more bullish environments and will do better. So I'll talk to you later.